Welcome to the Multifamily Investor Nation podcast. I'm your host, Whitney Elkins Hutton, the Director of Investor Education here at PassiveInvesting.com. And I'm so excited that you're here today. And we are joined by our guest, Alex Rozenfeld. Alex, welcome to the podcast.
Thank you. I'm a pleasure to be here.
Excellent. Well, before we dive into your 102 unit property, Pine Meadow Townhomes in Shawnee, Kansas, tell us a little bit about yourself, your background, and how you got into multifamily investing.
Well, we started freshwater investments with my partners in 2015. And at Freshwater, we empower individuals to own multifamily properties without headaches of traditional landlords while enjoying all the benefits that this asset class has to offer, such as portfolio diversification, tax advantages, and passive income. We help about 200 families to invest more than $100 million along with our own capital into multifamily real estate. We own 1,100 units in 4 states: in Washington, Oregon, Colorado, and Kansas. And our philosophy is to put people first. We ensure that our investors, our residents, our employees are at the heart of everything we do. One of our key principles is to distribute cash on all our properties, providing consistent returns to our investors. And we built a strong track record over the last 8.5 years. We achieved average IRR of 20% on all our realized projects. And we help individuals to accommodate their 1031 exchanges and to invest from their IRA accounts.
That's an impressive company bio, but tell us about you. Tell us about Alex. How did you get started in this space?
Well, I'm an immigrant. I came from Ukraine about 25 years ago. And my first job right out of the college with Fowler Property Acquisitions, the big multifamily firm. That's where I learned the business. And when I turned 40, I decided it's time for myself to start building a legacy for my own family. And I wanted to build a business, and that's how I got started with a small project, 44 units in Mesa, Arizona.
Awesome.
I'm just a few investors.
Awesome. And now you're in Kansas, so I'm super intrigued by the story here. Well, let's dive into the details of Pine Meadow Townhomes, 102 units in Shawnee, Kansas, which for those people who are listening, Shawnee is right outside the city metro area. And so, okay, when did you close on the property and what was the purchase price?
We closed on the property on May 1st, 2023, and the purchase price was $24.5 million.
$24.5 million. Okay, so you closed in May. Let's back up the timeline. When did you find out about this deal, and how did you find out? Did it come through a realtor? Was it off market?
It was a marketed deal by a CBRE team in Kansas City, and we toured the asset in December. We made an offer. We went through a couple rounds of bidding, and we tied up a deal at $24.5 million, and the whisper price was $25 million.
Okay, so whisper price $25 million, tied it up at $24.5 million. And you mentioned you went through a couple of rounds of negotiation here. Were you guys the only team bidding on this project?
No, I think initially in the first round they got like 7 offers, and they had three groups in the best and final round.
Okay, and what made your offer stand out?
Non-refundable money, and plus our track record and reputation in the market and with brokerage community.
So, how much non-refundable earnest did you put down?
We put down $500K non-refundable.
Okay. So we know it's 102 units in Shawnee, Kansas. What type of asset is this, right? They're townhomes, but is it like an A class, B class, C class type asset?
I would say it's a B class community, built in 2004. It's a very, very nice community, 10 minutes away from downtown Kansas, and it's very close to all job centers in Overland Park, which is a great market in Kansas City market. And we own two other assets, so we knew the market well. That was the reason that we went after this project as well.
Okay, so your offer gets accepted. You, at what point in time does, well, let's talk about the structure of the offer. Like, what was the exact structure of the offer? How much time did you have diligence to close? Did you have any extensions, stuff like that?
We had 30 days for due diligence. We put up another $500K deposit after we finished with due diligence, and it was a it was a loan assumption, which was a great great thing at that time, because as you know, the rates went up, and we assumed that at 3.58%. But as with loan assumption, it takes a little longer, and I think the closing time was 2 weeks after the loan assumption approval. That's how it was written in PSA.
For list, how long does it take to get a loan assumption approval?
I'm sorry, can you say it again?
For our listeners' sake, how long does it take to get a loan assumption approval?
Well, I think it took us 90 days to close the deal from the PSA execution to closing date, because with loan assumption, you need to wait for the it was agency debt, so we need to wait for the agency approval first, and you need to wait for the master servicer approval second, and then you can close the deal. So it took a little longer.
All right. So we went through a couple of different, we went through the purchase sale agreement, got it approved. You have 500K down hard at the beginning. You go through the diligence period, put down another 500K, so $1 million total, correct?
Yep.
Awesome. Okay. At what point in time did you tour the property? Did you tour it beforehand, or did you just tour it at due diligence?
No, we toured several times. We toured before the initial offer. It was end of last year, and when we brought our due diligence team, we were on the site again.
Okay. So let's talk about due diligence. How did that go? Let's talk about the physical part of due diligence first.
That actually went well. Since the property was built in 2004, we didn't discover any major issues. We noticed some little things that we're going to take care of. But we work with Griffith's Blessing. It's a property management company out of Colorado Springs. They manage assets for us in Colorado and Kansas, and we partner with them on a few deals as well as co-GP partners. So they brought their team. They brought like 7 people to the site. We walked all units. We did the file audit. We brought several contractors on the site to check the parking, the roofing, the plumbing. So we did a very thorough due diligence, and we were happy with the results.
Okay, and surprises at all?
No, not really.
Okay. Let's talk about
it was a pretty clean asset.
Okay, that's always great. What about the financial side of things?
Financial side of things. So as I mentioned, it was a loan assumption. It was 13.7 million loan on the property. It was a 53% LTV to total project cost, and we have a good track record with agencies. Most of our deals, but one, are with agencies, and all of them, thank God, they all have fixed rate, so we can sleep at night during this time. So it just we submitted the application, and it was just we needed a lot of patience just to wait for the final outcome, final approval, and final commitment from lenders.
Okay. Well, so what about the financial due diligence, right? So you've got, a lot of people think that, you're just checking it when due diligence, you're just doing a walkthrough of the property, insurance certification, you're done. But since you're getting lending, you've got the financial side, and of course you want this as an income producing property. So what about that due diligence? Did you underwrite those tenants? What was the occupancy rate, vacancy rate? Was there any surprises there?
Well, the occupancy rate at the time of acquisition was 97%, and we looked at the historical financials as we always do a couple of years back, and It showed very strong occupancy during those years. We look at the expense side, and we since we have a knowledge of the market, since we have properties in the market, we could see that those expenses were in line with our other assets in the submarket. So we could trust those financials, those T12s that we got from the seller.
Okay. So I'm just curious, physically non-obsolescence here, great. Why is the seller selling? Do you know that?
I think it was not their business model. So they mostly developers, and they had this asset that they wanted to sell and reinvest that capital into new development. It's a big development company out of Kansas City.
Gotcha. Okay. All right. So you did capital on this deal. Tell us how much you secured for senior debt again. I know you went over that with us.
It was roughly 13.7 million.
13.7 million. And then how much did you raise in capital, investor capital, and how did you structure that deal with your limited partners?
We raised 12 million from our investors that we work in the past. Plus we added 20 new investors into this deal. The structure of the deal is it's very simple. It's 7% pref and 75-25 split, about that.
Okay. Any other IR hurdles in there or tranches?
Nope. No, that's just as simple as it is.
Okay. And then what kind of fees did you charge to this deal? What's your fee structure?
Our fee structure is we have acquisition fee 1.5%. We have asset management fee 1.25% on the property revenue, 1% exit fee, and that's all our fees.
Okay, awesome. So let's talk about after takeover. You took over this property. How did the first couple of weeks? Were there any?
It was a little challenging as it's always is, and but I think at this point we hired a great on-site manager, and we hired a great actually he was promoted from another property maintenance manager. So they got everything under control. The residents very happy that they have full-time team on the property, and things going well. We just visited the property. We'll look at the we wanted to decide the scope of the future innovations because it's 100% value add opportunity. We want to relocate the model unit, which is in a townhome, and we want to open it up for tenants and build up a new clubhouse and the leasing office.
Awesome.
And they're potentially thinking about rebranding the property as well.
Okay. Yeah, I know a lot of operators do that. So just in wrapping up, what did you find that was easy in this process that you thought would be a little bit harder? And then what did you find harder that you thought actually would be easier?
Well, I found that raising equity was easier because I was a little nervous. It was the beginning of the year, markets changing. There was uncertainty in the market, and but we raised successfully, and we had a few people that couldn't get into the race, and so that was easier than expected. And harder, I think it was harder to stay patient while we were waiting for the lender approval when we had $1 million on the line.
Yeah, I can imagine that's for sure. That's a lot to have down on that type of deal. Well, Alex, thank you so much for sharing your insights and knowledge with us here today.
You're welcome.
Yeah, if listeners want to learn more about you, where can they do so?
Well, there's a lot of information on our website, freshwaterinvestments.com. People can reach out to me directly at alex@freshwaterinvestments.com. I'm happy to talk and walk you through all our deals and how you can invest with us.
Excellent. Well, Alex, again, thank you for your time today. We look forward to hearing from you about your future deals.
Thank you so much.